Hello, Simon Dixon here, CEO and co-founder of banktothefuture.com, and I'm just recording a very quick update on some things that have been happening that may have gone under the radar and passed people's attention. So anyone that's been watching me over the years, you'll know that I've been talking about, originally I spent a lot of time talking about how banks need to be reformed and money reform needs to happen to prevent banks from creating money, issuing money, and spending people's money. Well, something has just happened that really has not caught the attention of much of the monetary reform community or much of the media for that fact. And that is that the People's Bank of China has just issued an announcement that they are creating their own digital currency. Now, I just got off an interview with CNBC Korea where I was discussing the announcement. And obviously on the mainstream TV, I don't get to go through all of the details because you've only got so much time. But the implications of this are quite profound. So obviously, Bitcoin has been around now for approximately 7 years, and transaction volume is higher than ever and is having more of an impact than ever, and many people are seeing 2016 as the year that the technology behind Bitcoin and Bitcoin itself will go a lot more, or be implemented a lot more into our mainstream financial system. But the People's Bank of China issuing their own currency may seem from the Bitcoin community as a bit of a strange thing or a bit of a pointless exercise. But upon further reflection, you've got to actually realize what the implications of this announcement actually are. It means that the central bank is issuing a currency, a digital currency, that cannot be created by banks when they issue loans. So the traditional financial sector, the monetary policy is something as follows. The central bank creates banknotes and coins, and they influence the money supply through the purchase of bonds or programs like quantitative easing. But the vast majority of money is created by a bank when they issue a loan. In fact, 97% of the money supply in most modern economies is created by banks when they issue a loan, which means that all debt has to be, all money has to be created as a debt. And first, somebody has to go into debt before the money can actually be created. Now, Bitcoin came along and created the first monetary policy where people that were running computer algorithms were creating the money supply, and the money supply was fixed in code and couldn't be tampered, altered, and new coins get created every 10 minutes. Now, many people have been ruling out Bitcoin over the years, but this year it's become much more of a player, and it's created the first global currency where you can transact value from A to B anywhere around the world at scale, neutral money that has no opinion, that's not created as debt and is not backed by debt, but is instead backed by people running complex algorithms and verifying transactions called mining. Now, the implications of China issuing their own digital currency is that they're actually breaking down the monopoly that banks have over the creation of digital money when they issue a loan. And essentially, you've got a lot of the reforms that a lot of the monetary reformers have been preaching for over the years, without many of the monetary reformers actually noticing and seeing that this is actually the reforms they've been preaching in a different way than they may have thought. So monetary reformers, for example, institutions like Positive Money, have been advocating that central banks should be creating the money supply based upon inflation targeting, and not doing that through a bank or indirectly trying to control how much money a bank actually issues. And it shouldn't be done through debt. That's exactly what the People's Bank of China has just announced. The People's Bank of China has announced that they're creating a digital currency, and a digital currency is not backed by debt, and it's not issued by banks. And it is a transparent way of getting a new form of money into the system. Now, the real interesting thing about this is that this new form of money is kind of like, it depends how they spend it, but it's also some of the the reforms that economists like Steve Keen and in the UK, many politicians like Jeremy Corbyn have been advocating for, which is quantitative easing for the people. So if they spend this money, this new created digital currency, and is used to inject new money that can be spent at small to medium-sized enterprises, can be used for infrastructure investment, and spent in different ways, then you're actually getting the exact reform that monetary reformers have been advocating. And you know what the beauty is? It's all been done without actually having to, change the existing financial system. So we're now getting a coexistence of a new form of digital currency. If this all happens, it's just announcements for now. Getting the coexistence of debt-free money creation that could be perceived as quantitative easing for the people, but without having to back it on the debt capital markets or bond markets. Instead, you're backing it upon, we'll see how China actually implements it, but mining, which is a sustainable way of implementing new money supply, depending on how they actually do it. I mean, it brings with it other challenges, but it's monetary reform. So if you look back on my book, Bank to the Future, I originally talked about some of the top-down reforms that governments need to make in order to drive sustainability in banking and finance. And after 2008, they made none of them. Banks still spend money, banks still create money, and almost all money is issued as debt. So that's why in 2016 we're most likely to be going into the same cycle of a worse crisis than we saw in 2008, and we've already seen that at the beginning of the year with stock markets crashing, a flight to bonds, a flight to cash, and most likely property markets to follow, followed by credit card markets and student loan markets and auto industry markets, which all have unsustainable levels of debt in order to drive the economy forward in the years, and the quantitative easing that essentially did not make its way down to consumers. It just propped up the balance sheets of banks and was used by large corporates to buy back their stock and create a stock market bubble. So we're at that. We've got that top-down reform announcement from the People's Bank of China, and it's gone unnoticed by all the monetary reformers that have been asking for this for years and decades. And how did it happen? The exact way I said it would happen in the book: bottom-up entrepreneurs who have created financial innovation, and that financial innovation has now given the People's Bank of China a new tool to create their own currency. Now, how do I think this will all roll out? Well, there's two ways in which the People's Bank of China could implement this announcement. One, they're either just using it as blockchain technology in order to create some more efficient, transparent, interbank clearing system where banks can clear with each other with the central bank on a blockchain using similar methods that Bitcoin uses. That's less exciting. That will lead to a efficiency improvement, but no real difference to consumers or the system. The second way they could implement it is they could actually implement their own cryptocurrency, which is the announcement that they've made, which is a two-tiered system of running a debt-based money system, the yuan, which is created when banks issue loans, versus a debt-free money system, which is a new digital currency which takes away the monopoly on digital money creation that banks currently have. If they do that, I think they could drive some real adoption across China, and a leading central bank like PBOC would have others that are looking at the blockchain and Bitcoin at the moment, like the Bank of England, probably follow. So we could get large-scale two-tiered systems of monetary reform all around the globe as a result of this announcement. The next thing that will happen is people will realize that a government-issued digital currency is actually not as valuable as a currency that works like Bitcoin, which is, has no censorship, can be transported anywhere around the world, has financial inclusion built into it because anyone can participate in the system, and doesn't actually need the government guarantee, which is one of the main selling points of a centrally bank created currency, a fiat currency or a digital currency. Because you have to remember, the government guarantee is only needed if you're creating money through a bank as debt, because you need to guarantee the financial system and the banking system against run on the banks and over leveraging and people losing all their money. But that's not needed with a digital currency. So therefore, the main advantage of a central bank issuing their own currency is not actually there. So what will happen? Well, if they successfully make the whole of China adopt a digital currency, just like Bitcoin, but their own version, which will probably be censored, and then people will use virtual private networks and VPNs in order to get over the Great Firewall of China, just as they do today when trying to access services like Facebook and Gmail, because that world of control just doesn't exist with technology anymore, unfortunately. If they can get merchants and businesses all around the world to accept this new form of digital currency, people will start to realize that actually Bitcoin works a lot better than the PBOC issued digital currency, because it's neutral. It doesn't require you to upload your identity to make a transaction, which is good for governments trying to tackle money laundering, but bad for consumers because it puts them at risk of identity theft and having to upload important data into databases which could be hacked and be harmful to the consumer. So, the most likely, as we've seen in the traditional financial system, the war to prevent money laundering supersedes any consumer protections to protect people's identity. So that will probably be an inbuilt feature into the PBOC digital currency. And therefore, transactions will be censored based upon the government's agenda. And therefore, in order to get over, people will just use other currencies because it may not have capital controls, or it may not have a lot of the features that Bitcoin has, which is a free flow of money very cheaply from A to B anywhere in the world where anyone can participate for virtually free, may not be built into the PBOC issued digital currency. So if everyone in China adopts a PBOC digital currency, then you've just got to flick the switch to accept Bitcoin as well. And everyone will research what their digital currency is. So this is great news for Bitcoin if this happens. It's great news for traditional fiat money, because we could have the reforms that are needed in order to drive some more sustainability into the fiat monetary system. It's great news all around, and something that's gone completely unnoticed by the monetary reform community. The mainstream media covered it more than the monetary reform community. And so this is all rolling out the way that we thought it would be. Bottom-up reforms, top-down looking at entrepreneurs and making the changes based upon what entrepreneurs are creating. And the end result is more financial inclusion, a more transparent financial system, and a two-tiered system whereby if the traditional fiat currency collapses, as it will do, because in 2008 we didn't solve any of the problems with fiat currency, we allowed banks to continue creating money, spending money, and we kicked the can down the road a little bit further with quantitative easing, which didn't make its way into business, to small business, to create a recovery or be spent on infrastructure development or something valuable to the economy. So we're getting all the reforms, and the most important part of this is, why is China picking this moment to issue a digital currency? And the only answer I can come up with, either they're using it for interbank settlement and it's not quite a digital currency, it's just the blockchain used to improve efficiency in the technology of a central bank, or they're actually hedging a collapse of a traditional currency. And remember, gold, China, PBOC have been accumulating gold at a vast rate. So they're hedging against fiat currency through gold. Now, the problem with gold is that gold, it has been a great hedge against inflation, but we're moving into deflation, and gold is not a good hedge against deflation. So perhaps PBOC's announcement of a digital currency is actually a forecast and a hedge against a deflationary environment. And if you want to take it to the extreme, the collapse of the fiat system, the dollar system, the yuan system, and the traditional currencies. So, big announcement, and just wanted to share some thoughts on where that's all going. Exciting times. Make sure you're protected for the rough ride ahead, and I'll post more updates to make sure that people are informed as markets unfold and new announcements come through. Thank you for your time.